Welcome back. Well, just keep an eye out on the India VIX. There is a big drop that we have seen. I've not seen this sort of a drop actually. The last time we saw this sort of a drop was way back in 2014 as well as 2016. The VIX, it gives you a rough indication with regard to volatility that's expected. So two factors, either the markets are revving up for a big rally or we're getting a little too complacent. And that's why that's down closer to 19% as we speak. So that's a big drop out there. I don't know whether we have some candles, we'll be able to tell you the kind of drop that we saw the minute the markets opened itself. So that's a big drop. It's trading at multi-month lows out there. So that's the India VIX as well. Well, in the next few minutes, we'll get you a couple of managements. One is with regard to persistent systems. And later on in the show, we'll get you the management of Rajratan Buyers. Manglam joins us as well on Chartbusters. Hey, Manglam.
Hi, Nigel. Let's talk about persistent systems itself. It was the stock on the way down in yesterday's trading session, and that's largely because despite good numbers, the management commentary with regards to margins wasn't pretty good. In fact, the stock was lower yesterday, and it had seen a big run-up before the numbers already. So what is it that the management has to say with regards to the future going forward? Rima, our colleague, spoke to the company's CEO, Sandeep Kalra, began by asking him about the same, the margins. Let's listen in to that conversation.
The context of margins is in the context of a bigger picture. So if you look at the overall revenue growth that Persistent has had over the last 4 years, in the last 4 years, we have had a pretty good relative outperformance from a revenue perspective. If I was to give you statistics, the last 4 years, the industry has grown by 1.6%, 18.6%, 10%, and 2.7% year on year. Compared to that, Persistent has grown 12.9%, 35%, 35%, and 14.5% for the last 4 years. Now, if you look at the bigger picture macro, the macro continues to be tough. So all we are trying to say is we want to continue to be a relative outperformance company, keeping the margin at the same level or better. But if it is a question of growth versus margins, growth at the same margins is the priority. And if we can deliver better, we would rather under-promise, over-deliver rather than over-promise, under-deliver.
Okay, so growth at same margins is a priority if it comes to a situation where if there is a trade-off between revenues and growth and margins. So this 200 to 300 basis points of margin expansion, when can you achieve it? 3 years hence, starting now?
We are keeping that goalpost the same. So if you look at it from our perspective, what has to be done to grow consistently in a macro that is good or bad? So you need to have strong capabilities. You need to have strong customer relationships, the ability to mine existing customers and to acquire newer customers. All of this, when the macro is bad and the things are changing, so the technology landscape is changing, we need to invest in capabilities like generative AI, and we need to be ahead of the curve. That's what Persistent has always been known for, and that's what our endeavor is. We are not a price leader. We are a competitive leader with respect to capabilities and so on. So we are investing in the capabilities, not just to achieve our near-term goal of $2 billion in the next 3 years, but lay the foundation for a much bigger company to come based on the competitive differentiation on an ongoing basis. And as the market improves, this should definitely give us a much more leverage. And obviously, with that, the margins will definitely expand. So the goalpost remains the same. Next 3 years, aspiration of growth and margin expansion, both remain the same.
Okay, so in the next 3 years, revenue should double to, hit $2 billion and margin should expand by 200 to 300 basis points. This generative AI investments, you want to invest in capabilities. Have you put a number to it?
So if you look at it from a revenue perspective, it is too early to say. From a revenue perspective, while it is maybe in lower double-digit numbers from a run rate perspective, but it is going to go like a hockey curve. It is not just about generative AI. Generative AI will have a downstream impact on many projects, which are data-related projects, cloud-related projects, and so on and so forth. But the tip of the spear remains generative AI. So we need to make sure that we are having good partnerships, whether it is the Microsoft, AWS, Google, IBM, Salesforce, and are building capabilities in these and niche players that are emerging big time. Also investing in platforms that we are building that will differentiate ourselves in the thing. So overall, I don't want to put a number on the investment in this, but most of the forward-looking companies will have to invest in this.
Okay. And is there a number on the generative AI pipeline like your peer TCS did?
It is too early to say all of this. And I would say anyone who says generative AI pipeline, that is just tip of the iceberg. the bigger pipeline is not just generative AI, it is AI-led projects, the cloud-led projects, and overall transformation projects that will get spawned. And if you look at Persistent, most of our work is forward-looking, build and then maintenance of the same as we go along. And that has held us in very good stead. The relative outperformance that I talked about, we have doubled the company in the last 4 years. That is all based on this.
So since you are aiming for industry-leading growth in FY25 also, can you tell us if FY25 will be better than FY24?
Rima, you know we don't give forward-looking guidance, but if our track record is any outperformance-related thing, we have done significant outperformance. Our pipeline is good. We have done good order books. So relative to the market, relative to where our peers will land, I'm pretty reasonably confident we'll have a very healthy outperformance.
Okay, but relative to your own performance in FY24?
Let the time pan out, and the aspiration is there. If we are saying 3 years, $2 billion, you can do the CAGR.
Okay. This planned ramp down of one of the projects of your top client, will it continue and hurt growth in the subsequent quarters? If yes, how much?
So look, again, we don't give forward-looking guidance. All we can say is we have delivered 14.5% for the year, including this planned ramp down. We have delivered 3.4% quarter on quarter, including this planned ramp down. So we have a good business plan. We have an eye on the ball on various customer categories, and some customers will go up, some will go down. But as long as we deliver healthy quarter on quarter, healthy year on year growth, that is where the company is headed.
Okay. And just in the near term, how is Q1? Since you've said that the macro environment hasn't changed much, it's similar to what it was and it continues to remain tough. How will Q1 be relative to Q4? Similar, or because Q1 is typically seasonally stronger, we should expect Q1 growth to be better than Q4?
Again, no forward-looking guidances, but look at our trajectory, look at the order wins, they're healthy, should convert.
And when do you expect BFSI? You've said healthcare will lead growth for the company in FY25, while BFSI will remain a bit subdued in high-tech. When do you expect BFSI and high-tech to turn around? What is the own internal assessment?
So if you look at the last quarter gone by, barring the top one customer, high-tech grew by about 1.6%, BFSI grew by 1.8% quarter on quarter. And so it is not bad growth relative to those segments for our peers, because obviously we live in a marketplace and the market demand environment also decides how we grow. So for the near foreseeable future, while we have said healthcare is the biggest thing, there are different teams focused within Persistent on different segments. We'll let the time pan out. We are relatively confident of performance, which is more secular across segments.
Well, that's the management of Persistent Systems, putting it very simply that they rather promise and over deliver. For the time being, though, the stock yesterday was down closer on 10%, despite a good showing. The street is cautious on the guidance given, and today it was up closer on 2%. But from the top, stock is still a little bit nervous, has corrected. Well, let's shift focus then to our special segment. We normally get you a few ideas of profit from Money Control Pro. Anubhav Sahu of moneycontrol.com joins us to talk about a stock that he's tracking closely. Anubhav.
Today we are talking about Syngene, which is the strongest play in the CRAMS space, as it offers services right from the discovery of molecules to manufacturing of the same. It tends to benefit the most from China Plus One trend. Now in this context, passage of US Biosecure Act could be a key catalyst. This proposed legislation aims to end government contracts for the firms that have Chinese biotech companies such as WuXi Biologics as suppliers. And hence, it has been reported that leading US pharma companies are looking for rival CDMO players as partners. In addition to this trend, biologic manufacturing will remain a key growth driver for Syngene. In this regard, acquisition of a biologics manufacturing unit of Stelis Biopharma is a timely addition which should support additional demand in the second half of fiscal 25. Another medium-term earnings driver to watch is the ramp-up in commercial supplies from Mangalore API unit. Among the headwinds to watch is the funding prices in the US biotech industry. It is showing signs of stabilization and can take 2 to 3 quarters to normalize.
All right, so that's an idea for profit. Speaking about ideas for profit, just keep an eye on Vodafone. Idea up 6% at the high point of trade as we speak. Strong demand for the FPO. And as a result of which, the entire telecom space is actually doing extremely well. So we have a big move coming by on names like Indus Towers, and also Bharti Airtel has moved well. Bharti Airtel, in fact, this month is up around 8%, very close to a record high, if not record high already. Yes, it's a fresh record high for Bharti Airtel as well. So the telecom space doing well. What we'll do is take a short break. On the other side, we focus on the auto ancillary space. We have Sunil Chodia, who is the managing director of Rajratan Global Wire, joins in to discuss their quarterly results. Well, holding up for the market, just around that 22,400 mark. Let's talk about Rajratan Global Wires then. The company reported their numbers yesterday. Revenue growth was close to around 9%. Margins compressed by about 100 basis points, and as a result of which the net profit was absolutely flat. We do have with us the Chairman and Managing Director, Sunil Chodia, joining in. Thanks a lot, Mr. Chodia, for joining in. You know, earlier you had guided for 20% volume growth in FY24. You've fallen short of that. 16% is what you've done. And that weakness is largely led by the Indian volumes. Thailand, you promised 40,000. You've gone ahead and done 43,000 tons for this entire year.
Yeah.
What explains this weakness in India, and what's your target for this year?
We were short of target because of influx of import. In quarter 3 and quarter 4, some imports came in, which ate away our market share, and that is why we were short of this target of 20% in India as well.
So,
okay, all right. So, Mr. Chodia, hi, good morning, and it's been a while since we spoke last. But let's, there have been some problems in terms of imports, as you're mentioning. Now, on this sort of a base, you've done 103,000 units for the past year. On that base, what is the growth that you can see, the volume growth, point number 1? And break up the volume growth for us as well. India was around 61,000, Thailand was around 42,000. What kind of a growth are you estimating in both these two geographies?
Yeah, Nigel, we are starting production of our Chennai facility very soon. And as committed with the PLI, with the Steel Ministry, we will be making minimum 14,000 tons from our Chennai factory. So the Indian growth will come only from the additional production of Chennai factory. I don't project any growth in our Pithampur factory this year. And for Thailand, we are targeting 50,000 tons of production and sales this year. If you look at quarter 4 of Thailand, we have done close to 13,500 tons. And 50,000 is not difficult for Thailand this year. Yes.
Just putting those numbers together, 14,000 and 8,000 extra. So together around 22,000 tons is what? So for the end of this year, you should be around 1.25 lakh tons, correct?
That is our target, yes.
All right, 1.25 lakh tons. What about margins then? Because, back in the day, your India margins were close to 20%, Thailand margins were around 15%. Now, the Thailand margins went down to about 11.5%, with India margins going down to about 18% as well. With imports coming in, competition, and in Thailand, you looking at market share rather than just prices, what is a margin band that one should be working with for both India and Thailand?
Yeah, margin also depends on the competition in the market. And lately, we have seen the global market is very competitive, and we are facing the margin problem in Thailand. But our board and we decided to, work on volumes rather than targeting margins. That is what we did. Yeah.
So what margins are we looking at? Because this year, it's around 14.4% in the fourth quarter. What are we looking at?
I don't see any possibility of growth in margin in India for the current year. But definitely we will improve to 3 points in Thailand this year.
So do you see the possibility of overall margins reducing to say 12 to 13% in FY25? Is that a fair estimate with 1,25,000 tons volumes? Can margins be between 12 to 13%, or can they be lower than that as well?
No, I will talk separately. For Thailand, the margin can be up to 12% EBITDA, and India will remain same 18%, close to 18%. So on consolidated basis, 15 to 16% margin is possible.
Okay, all right. And could you tell us what are the PLI benefits are? 14,000 units, what is it? If you could put a number, as a percentage of sales, you'll be getting some money, right?
It is 8% of sales value. one
Okay,
time.
so 8% on that 14,000 tons that you're going to be selling.
Correct.
Okay, got it. How's your debt in books? How's your balance sheet looking? Your interest cost for the past year, I think, was around 20 crores. What is it?
So, as committed or as indicated in the earlier conversation, we have been able to manage debt below 200 crores. So the net debt on the balance sheet as on 31st is 190 crores. Okay. Though we have invested up to now 230 crores in Chennai, we have only completed expansion in Thailand last year. And as promised, we have and we'll continue to control the debt below 200. Yeah.
That's good to know, so that you will continue to control the debt below 200. Last spoke was close to around 220 crores. Just wanted a couple of numbers on Europe and Korea. I remember you were looking at getting some clients in Korea. How much does that account for in your overall sales right now? Have you won some clients out there? And Europe as well, 5 to 7% of your sales, you wanted it to increase. Where does that go?
So Korea, yes, there is a delay in the Korean customers. We have got the approval, trial quantities have gone, but we didn't get the regular business last year. We are expecting regular business this year from Korea. We have got two regular clients, two regular customers in Europe. For last 1 year, we have been supplying, and this year also will supply. We also got two major, approvals, not approvals, in principle agreement with two global customers for approval this year. So this will keep on growing. The export and the international marketing or exports will keep on growing, both for Thailand as well as for Chennai.
Okay. Okay, all right. Just one more question, Mr. Choudhary. You have bulk of the market share here in India, right? What is the current number that we're looking at since imports were coming in?
Total consumption is around 150,000 tons in India for bead wire.
Okay.
Yeah.
And your market share is how much?
Our market share was, last quarter was around 37%.
37%. Okay. The reason I ask you this is because the Tatas are in there, and, there is some kind of reports that suggest that maybe, in fact, a big name like the Tatas could be looking at the business that you're in. Have you heard anything on that front, or?
We are already into this business, and they have also expanded capacity, and we are competing with each other.
So do you want to break? I'm aware that they are already in the business, but they didn't. They were not showing any aggression in this business, and that's why the street was very excited, because they said that you will get that premium multiple maybe at some point of time because the kind of stronghold you have on the market. So break up the market for us. You're at 37%, and the other players are at how much? How much is imports? How much do the second best player have?
Yeah, so import, which had gone up in 2 quarters, has again come down to 10% of the total requirement. The should be around 30% of the market share. We are at 37-38% market share, and another player, Aarti Steel, is again 15%. So
okay, and the Tatas, they have already announced this any kind of capacity expansion, because they are second best, as you said.
Last year they have expanded. They were at 30,000 tons, and now they are 60.
Okay, but you're not worried about competition?
No, we are in a competitive business, and we have to continue doing excellent business. We have to continue improving our quality cost.
Right. Absolutely. I mean, that's the way to go. Just one question for the books. Mr. Choudhary, this year you did about 103,000 tons of volumes, and revenues were close to 890 crores. What's your view on realizations going forward? If you're targeting 125,000 tons in volumes next year, using the current realizations itself, your revenues would not be much beyond 1,050 to 1,080 crores. Do you expect realizations to improve?
Revenue is factor of steel prices.
Yes.
If you track the steel prices in last 1.5 years have come down by almost 30%. Okay, so accordingly, the bead wire prices also came down. So and there is a total, revision of prices by around 25-30%. So if steel prices go up, the revenue, the top line will be more. Otherwise, at the current level, you are right, it will be around 1100 crores of top line for the next.
Okay. All right, Mr. Chaudhary, always good speaking to you, sir. Past few quarters have been a little bit rough, but you're saying that FY25 will be much better. So that's why you're looking at 125,000 tons with margins in the mid-teens. We'll track you on these numbers, and we appreciate you joining in and giving us all of those details. Wishing you all the best. Well, for the time being, let's slip into a short break. As we do that, well, we have an announcement to share with all of you. We are launching CNBC-TV18's first ever personal finance webinar, CNBC-TV18 Accelerate, Personal Finance Handbook with Sonia Shenoy, where she'll be joined by 3 well-known experts on Saturday, the 11th of May at 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. That's lots to learn and lots to do. Whether you're in your 20s, 30s, or even 40s, this live webinar is for you. We have limited seats, so don't miss the chance. Register now, scan the QR code to register, or log on to CNBC-TV18.com, and we'll see you on the 11th of May. Welcome back. You're watching Chartbusters here on CNBC-TV18. By the way, on the markets, the headline index, Tata Consumer has suddenly taken a U-turn. It's at the low point of the day. That's seeing some selling. Sun Pharma as well has moved a little bit lower. And both those two have pulled back. Explains why the market's a little bit off the day's high.
Tata Consumer reports its numbers today, so ahead of that, maybe it's lower. And yesterday was doing extremely well, so maybe some bit of unwinding out there. Just keep an eye out on Honasa. Yesterday was up around 4%, and now Mamaearth, the stock is up around 8%. So a big move is what we're seeing on that one as well, for the second day running a fresh high on that counter too. But on the obverse side, we have M&M Financial, which is under pressure after it deferred its earnings board meet due to discovering a fraud in one of its branches in the Northeast. Abhishek joins in with a full lowdown on this. Abhishek.
Well, M&M Finance has deferred their board meet to a later date. They were to announce the results today for their Q4 FY24 numbers. There has been a fraud which has been detected in one of their branches in the Northeast, and this is with respect to the retail vehicle loans that they have given out. So fraud involves a forgery of KYC documents. The expected financial impact is about 150 crores, which forms about 21% of the Q4 FY24 estimate of PATs by analysts. And I spoke to a few analysts. They say that the average ticket size is about 3 to 4 lakhs. So this could be around 3,500 or 3,750 to 5,000 vehicles, which could be the range with respect to where the fraud has been detected. Necessary corrective actions have been identified, and the persons who are involved have been arrested. Also, we have brokerages who have written on this. Investec says the amount forms 15% of Q4 FY24 PBT and about 6% FY24 PBT. IFL Securities has written, they say that the quantum of fraud is about 3.7 times to the disbursals to per branch. So the amount seems to be very large for a single branch, and it may have been perpetuated over a few quarters or few period. So growth can get impacted in the near term as the management continues to focus on tightening the control that they have over the branches, as well as implementing remedial measures for the same. Back to you.
Okay, all right. Abhishek, thanks a lot for that. Explains why the stock is down closer around 4%. On that note, though, we'll wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.